Is there a link to be drawn here between what's happening around the global banking crisis and talks of liquidity or credit crunch, the concerns for REITs here?
Look, everything is connected potentially, and you can get some, potential collateral damage from things that are going on, weakness in the banking sector overseas and that sort of thing. What we have seen, we have seen some, small explosions going off in commercial property overseas. So we've seen funds from the likes of, some big names like PIMCO Columbia, Blackstone and Brookfield, variously getting into problems with defaulting on debt obligations in some funds. But we've taken a look at some of those, and the statistics on some of those funds are very different to what the big Aussie REITs display. So a lot of those problem areas are things like portfolios with very high vacancy, like 30, 40% vacancy levels. By contrast, the big office REITs here have vacancy typically in the sort of low to mid single digit, sort of around about the up to 5% range. Some of those blow ups overseas are also very much on high LVRs or high loan to value ratios of, I've heard of as much as one of them was on an 81% loan to valuation ratio, as compared to, say, the big Australian office REITs like Dexus, GPT, Mirvac. They're more like on gearing levels around the 30% mark, significantly lower. And as I mentioned, a lot of their debt is interest rate hedged, so they're not going to be as exposed to rising rates as quickly as where we've seen problems overseas.
On the point about valuations, there's a lot in the news at the moment around private assets and commercial property valuations in line with rising interest rates, and I suppose they're not valued as or revalued as regularly as residential. Is there concerns that as these do get revalued, people could say the values of these portfolios fall a lot?
Yeah, we do expect the prices on the physical property values to come down. Um, and we've been saying that for, pretty much probably 2 years, I'd say, definitely since late 2021. We've been expecting that. The question is, how much are they going to fall? We don't think they're going to fall as much or as far as is being implied by the security prices of the listed REITs. So some of those big office REITs are trading as much as a 35% discount to the net tangible asset backing. Probably in their office portfolios, we will see some declines in value, but we've also got to remember that these big office REITs are diversified. They don't just hold offices; they hold industrial properties that are trading pretty strongly. They hold some retail properties, and they also actually have a lot of intangible value in things like development businesses or funds management businesses, that's not even captured in that net tangible asset calculation. So um, essentially, we think if you're buying a listed REIT on a, say, a 35% discount to NTA, you've got a big cushion to falls in the tangible assets. Plus, essentially, you can argue that you're getting their development and funds management businesses for free. So someone like a Mirvac, who has we think, a very good development and funds management um, business, we see that as attractively valued at present.
So, where are some of the other opportunities? You've mentioned Mirvac in this space.
Yeah, Mirvac is one that comes to mind. Also, Dexus and GPT both have significant funds management businesses that aren't captured in those net tangible asset calculations and do look, and they're trading at significant discounts to net tangible assets. We think those two are undervalued. In the more in the retail space, we don't think we're not bearish, but we don't see we see those names as more like around fairly valued. Office is the big office plays is really where we see the biggest opportunities, and essentially the CBD is on special at the moment. It's you can buy it essentially at like I said, 25, 30, 35% discounts to what a lot of these superannuation funds who hold the physical assets are. You can buy them at 35% discount to the values that those super funds hold the assets on their books, by accessing the listed REIT space.
This video has been prepared for clients of Morningstar Australasia Proprietary Limited and/or New Zealand wholesale clients of Morningstar Research Limited. Any general advice has been provided without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest. To obtain advice for your own situation, contact a financial advisor.